Hi everybody, and today we're gonna take a look at the beverages non-alcoholic sector of my investment portfolio, and I'm investing into two companies here, Coca-Cola Euro-Pacific Partners and Coca-Cola FEMSA or Latin America market. And I'm having the exposure of 13.9% to these two companies. And let me explain to you why, because I think that is really important to share this information with you, because most of you don't know these nuances, and I would be really glad to share them. So if you go to Finviz, which I really like to use for free analysis of any companies, it gives me the really nice statement with the macro level information for the current year, next year, and the next 5 years as well. And here you might see that if you type Coca-Cola, you will not see one company as most of you will expect from, for example, from Pepsi, right? So Coca-Cola gives you four options to invest into, or four companies. So one is the Coca-Cola that most of you are buying and basically thinking that this is the true Coca-Cola, right? But they have the other branch called Coke, which is Coca-Cola Consolidated. So this is a bottling company producing the packaging and all the other materials that is needed for Coca-Cola. This is very, very low margin business. So I'm not reviewing this company at the moment, but you can consider that the Coca-Cola and Coke are basically the US branch. So everything sold in the US is basically considered under these two companies' umbrella. And the other two companies are Euro-Pacific or EU. So Coca-Cola in the EU is basically called CCEP ticker, and the Coca-Cola based in the Latin America or Mexico is called KOF ticker. So all these companies basically are the Coca-Cola we know and love. So let me show you what I did in order to understand into which of these four companies you should invest in. So again, we are excluding Coke just because it's a very low margin business company. And let me just show you this. So the profit margin is 5.5%. And overall, there is no growth this company can be expecting because of the low dividends as well. So overall, you might understand in a small market capitalization. So overall, you might understand why I'm not very obsessed with this company, but you might also check it out if you're interested in it. So I've taken all of the information from Finviz and split it first four rows into the first tab of this doc and the others into the second tab. And here we will go over all of the nuances, why I think something is interesting to highlight, and you'll understand what are my thoughts on how I came to a decision to invest into these two companies over the time. So first of all, you might see that Coca-Cola USA branch is in the S&P 500 index and the Dow Jones Industrial Average. So this is why a lot of people are buying it, just because it is there. And I really want to outline that it's hard to find S&P 500 companies at a really attractive rate, just because a lot of people are buying it for no reason, just because they think that it's going to be increasing over the time. And somewhat it's true, because if people will start buying it even more, then your stock price will grow. But it doesn't mean that the company is actually having free cash flow and in general cash flow to pay off, the dividends and to pay off the investors over the long period of time. And this is basically one of the reasons what makes this company less attractive than the other Coca-Cola branches. And market cap is 260 billion. And let's compare it with the other companies. So LATAM has only 15 billion market cap and EU has $25 billion market cap. And all of you might already think that, oh, that's the great choice. But let's take a look at sales. Sales are 42 billion. So it's 25% of the market cap. But compare it with Latin America, 11.6% billion in sales. So it's close to the market capitalization of the company. And it's not somewhere near what US branch is having. So US branch should increase it to, I don't know, $180 billion in order to match what Latin America is doing. And if you compare it to the EU, even EU has 17 billion in sales, which is also very close to the market capitalization. So this gives us an understanding that in every $1 million invested into this market capitalization, we are getting a lot of sales straight away. So this is basically one of the reasons how you can understand what growth this company is having. And in terms of income, income is basically 25% of the sales, while it's only 8% for Latin America and even less for EU. But I don't think that it's a problem, and we'll discuss it later on as we go over this table. So if we look at PE ratio, so the price you're paying for the future earnings of the company, you might see that it has 26. This is really high price. And I will be honest, this is not interesting for me to invest into companies with this PE ratio unless elastic this company has an elastic demand for its product, like say electricity, right? So when I invest into electricity companies, I don't think that someone can basically refuse from using electricity power. So this is why I invest into that type of companies. 26 PE for non-alcoholic beverages, well, that's too much for me. Even 23 is too much. And if we compare it to Latin America, it's at 16.3, and the forward PE as well at 16.3. And in Europe, it's 16.7 with the perspective of having 14, which is a very attractive forward PE ratio. And you might already see that it's nowhere near the forward PE of US company. So any dollar invested into this company will be having a lot less growth potential than any dollar invested into these companies. And you can already see that PEG ratio is way better for both of these companies. If we look at EPS this year and EPS next year, you might see that the EPS next year is projected to be pretty high for the other companies in Latin America and EU rather than in the US. And even the growth this year was 25% in the US, while 52 and 96 in the other regions. So it also gives us an understanding that these companies can grow way faster and way better because this is again the same brand. This is Coca-Cola, just in the other markets. And it's not oversold, it's not heavily overinvested into, and this has a lot of sales versus the market cap. So if they invest more into the market cap, build more factories, sell more products, this is how they will get more sales and more income in the end of the day. If we look at the shares outstanding, you might see 4.3 billion for Coca-Cola USA, 200 million for LATAM, and 457 million for CCEP, which makes basically us all understand that it's the right time to invest into these companies as they grow, because we will be owning bigger share of the companies for every $1 invested in it versus the USA. And again, just look at this competition, a lot of short sellers, everything might happen here, and less volatile it will be there because again of the growth ratio that we have been prospecting or expecting from these companies versus the USA, where it's already expected to be bad. And if we look at the performance for half of the year, you might see minus 6% decline in the US, while it's 22% growth in LATAM and 4.5% growth in sales for EU. And what's really important to understand, minus 6% does not mean that it's a little bit better than plus 4%, because the difference between them is 10%. And the 10% growth for any company, that's a lot. And just imagine this drop. So the difference between 4.59 and minus 6 is basically 10%. And just imagine how hard it is for the company of this size with market cap of 260 billion to grow by 10%. But this sounds way easier for the other markets like EU and LATAM, because they need to make a really small step in order to increase their market cap twice and their sales twice, rather than in any other developed market. And we are talking about the markets which are more legally covered with the rules and laws, that it's less volatile to be expected that these markets will drop massively or something will happen over there. If we look at the other macro data, you might see that the dividends is at 3% for the USA, 3.7% for LATAM, and 3% for EU, which makes it all attractive choice for the dividend investor overall. And the price recommendation and the recommendation of the analysts are the same for all three companies. The only exclusion that you should consider is that for the LATAM market, you need to pay a small fee for the dividend payouts, which is 1 to 3 cents usually, and you shouldn't be worried much about it, but it will eat a little bit of this dividend percentage overall. In terms of price to free cash flow, this is very concerning, because you might see that the price to free cash flow is way better for these two companies rather than for the USA branch, and they already not have many cash flow on hands in order to improve drastically the situation they have. In terms of debt, the company is already having pretty big debt on hands, while in the LATAM market, the debt is 3 times lower, and in the EU, it's somewhat similar to the US one. But again, looking at market capitalization in EU, it can grow 2-3 times more without any issues. So this is why I don't expect that in terms of the numbers that this is a concerning debt, but I think it's really one for the USA branch. If we look at the sales, you might see that the sales over the past 5 years grew by 8.5% for the US branch, by 9% for LATAM, and by 8.5% for the EU, which basically is somewhat similar. But again, PE ratio is way better for these two companies, which means higher return on invested capital for us as the shareholders. And the sales in the last 5 years were negative for the USA branch, while it was positive for LATAM for 1.9%, and it was outstandingly positive for EU for 8.5%. So this is why it's really interesting, and you can see that even sales quarter over quarter were outstanding for the EU region, which again makes us think that this is the company that could be really growing fast in these two markets because of how strong the brand is, but it's not oversold, and it's not a hype stock that a lot of people will short, or any other issues might be happening versus the USA one. If we look at the margins, most of you might basically say here that, okay, this is a really profitable company, I'm gonna choose it over the others. And it really looks like this from the first glance, because the gross margin is 44% and profit margin is only 6.8 for the LATAM, and 37 and 8.7 for the EU. But here is the thing. So first, you need to conquer the market and you need to sell more in order to be represented there and teach the consumer to buy your products. And only then you can start increasing the price, because people will be keep buying the products just because they like them, regardless of the price, if it's 5% higher or 10% higher. But now I think that these two companies are in the stage of growth where they are adding more products, they're adding themselves to more shelves on the market, and this is how they get the consumer buying their products, and then they can slowly start increasing the margins and earning more from the products they sell. I think these companies are on this stage because in the US market this is already well established brand. It's there for like dozens of years and everybody knows them, even who are 50 and 70 years old, they still know the Coca-Cola and they like it. So this is why I think that the same should happen in the LATAM and the EU market, and this will be happening over the time. So this is why I'm not concerned with the profit margins of this company, and I think that it will slowly grow to the benchmark that US market is having. But at the same time, the last metric that we can take a look at, performance for the year and the year to date, and you can see that it's negative trend for the US branch, while it's quite positive for LATAM with huge growth, because again, LATAM is considered to be the fastest growing market in the world in 2023. And in the EU, you might see that performance for the year is negative 4%, which is higher than the US twice. But year to date, they recouped 1%, while the USA branch lost 6, which means that the trend is negative. Like, this means that the trend is negative. And this is why I think that once you are reviewing an opportunity to invest into Coca-Cola, you should be basically considering this, that something negatively affecting the company growth. And it's not gonna be performing that well, to my view, if we compare it versus the other two companies. Because right here, I won't really position my choice as like, I love Coca-Cola and I want to own it for the lifetime. But how do I make the right choice? And how do I not overpay for this stock? And looking at these numbers, I really think that this is more perspective direction at the moment than the US branch. And the last and the final thing that we can review is the price versus the target price of the companies. So currently Coca-Cola is traded at $59 with the target price of 68. And if we look at the fundamentals of the company, you might see that the lowest analyst estimate is considered 62, which is surprising. Like, nobody is saying that it should be cheaper than this with all these negative trends that we just saw. And everybody is saying that you should be buying it. And if you look at the earnings per share, yes, they are doing great and they are beating the market, but not that much. They're either matching it or a little bit higher or in line with the analyst estimates. And the sales also are either in line or a bit overcoming basically the analyst estimates. But I don't see here something really great because like the growth is still negative when we look at both of these metrics. Like it's not projected to be increasing, which all of us are expecting. So going back to these numbers, I don't think that this is gonna be true unless people invest in Coca-Cola as they were before, buying more of their shares without any reason for it, just like buying it because it will be more expensive, like Tesla. So I think that something similar is happening right here. And the moment the hype will be gone or any recession will happen, you will see a fundamental drop like 20-30% in the price of stock for this company. So this is why I'm really hesitant to buy much of this stock unless I can get some bigger margin of safety, closer to like 20 PE for the company at the price of like $55. I think that is more or less the reasonable price if we look at the fundamentals. And here you might also see that buying it at, let's say, $60 does not mean that this company will be growing. You might see the drop to 42 like it happened during the COVID. And then the company was slowly recovering to the numbers we are seeing today. So this is why I don't think that it's like a lot. I think that this is a lottery, right? I don't think that this is the choice that you just make and always benefit from it. Maybe over the time, but it will take a lot of time to somehow recoup 26 multiple for PE that we are seeing here. And if we look at the other companies like Coca-Cola Latin America, you might see that the current price is 73, but it's projected to be 71. And this is confusing myself. And here is why. The low estimate that the analysts are projecting for the companies are $64, which is strange with the median to be exactly the same as it is now. And a lot of analysts are saying that you should just hold the stock. And this is what's interesting. The company was beating the EPS massively and then basically doing better than it was projected to be doing. And these numbers look way better than what we saw with the parent Coca-Cola company. Because look, they're more or less doing what they're expected to do, while this company is doing way better. And everybody's saying that you should perform worse, but the company is performing better. And we know why, because it's Coca-Cola. If it's performing well in these markets, we would expect it to perform really well in the others. But I don't know why analysts are not adjusting for that. And the same with the sales. Look, they've beat all the expectations analysts were giving it in the last 4 quarters. So they are continuing to grow the sales. They're continuing to benefit the shareholders from bigger sales. They have really high margin of safety with currently selling really low marginable products. And I just don't understand why the destiny of this company is not projected to be great. But I think that the only reason for that is that this company is not a hype stock. That is it. That simply is my understanding of this situation, because LATAM is going to be the fastest growing region in 2023, according to the analysis of economists. So this is why, how could Coca-Cola not perform really well in this market? I don't know. And all the numbers are basically saying us that it is going to be performing really well. Just maybe not many people know of that and buy their stock. And this is why I allocated 10% of my investing portfolio to this company and 5% to this company, Coca-Cola Euro-Pacific Partners. And it has the current price of $55 with the target of 62, which is also gives us really nice margin of safety. And if we look at the performance of the company, the low estimate is projected to be $50 or minus 10% with the median of 63, which is basically saying us that there is a way greater potential than we saw in the Latin America, but we do not have the projection of the economists that the European market is going to be increasing that fast as Latin American. So this is why I think that something is not pretty right with these estimates, to my view, looking at the numbers. And most of the analysts are saying that you should have a strong buy opinion on this stock. And if you look at earnings per share, it doesn't look that great. I'd be honest, it doesn't look that great and it's quite negative. But if we look at the sales, they're again beating the numbers. And I think that sales are the key for the success of any business. I don't think that EPS should be one, at least for the growth companies, because they need to sell more products. They need to invest more into their current activities, having less cash on hands, putting it into manufacturing, contracts and other stuff. So this is why I think that this situation is a little bit different with the company. But with all these negative growth numbers, you can see that it's a strong buy and high median of plus 14% to the current cost of stock price. But what I think is something that we are losing out of sight, why I also like to invest into this company, even with negative numbers on it, is that euro is traded lower versus the US dollar currently, which means that the moment that things will go back and GBP, euro, Swiss francs, and other local EU currencies will be recovering, I think that's when things will be drastically improving. And this is when the company fundamentals will go drastically up. Again, this is my expectation. This is my margin of safety that I'm giving into this stock prices, that because the markets will be affecting these companies. That is my understanding. And this is why I'm heavily investing into these two companies, to see them having bigger growth in terms of sales. I think that this is their strongest side. The sales can be growing way bigger than they are now. And you can see this by EPS growth as well over the years, which is outstanding. They're beating the US. They are having less profit margin overall, but I think that it's gonna be improved over the time as people get more and more brand affinity increases, and people will just get into it and they will start using more and more of the products of Coca-Cola. So this is why that's my recommendation. Again, do your own choices, make your own decisions, think what is better for you. If you like Coca-Cola USA branch, buy it. If you like Latin America, buy it. If you like Euro-Pacific partners, buy it. But I think that overall, if you want some diversification, you don't necessarily need to buy Pepsi and Cola together. Maybe you just need to buy Coca-Cola USA, Latin America, and Europe, and this is how you will get exposure not only to different markets, but also into different management of these companies, while the product itself is dictating the need to own it forever. So hopefully you enjoyed this video, subscribe to my channel, let me know if you have any questions on anything that I highlighted in this video, and have a great day.